Is it dangerous to go up tax brackets? Many people ask me whether going up a tax bracket is going to lead to less income or other potential problems. Overall, there's a lot of implications with tax brackets involved. And just to kind of look through all of this, we're going to try to demystify some misconceptions. We're going to use the Canadian federal income tax as an example, and I am Terry Eland from Bishop's University, and I will help you out as much as possible through this procedure. So if I were to type in Google Canada income tax, I would have a series of links that I could click on. The one that I'm interested in here is the Canadian income tax rates for individuals by the Canadian Revenue Agency. If I click on this, I get this page here. And on this page here, you're going to see, if you're interested, you could see the tax rates for previous years. The year on which I am working on this is 2017. So we're going to have the federal tax rates for 2017. So the federal tax rates that we have are that we get taxed 15% on the first $45,916, then get taxed 20.5% on the next $45,915, which is essentially going from $45,916 to $91,831. So first and foremost here is we have to note that in Canada we have what we call a progressive income tax system. And what that means is that for different income levels, that same extra dollar that we can receive as a bonus is taxed at a different marginal tax rate. And as you can see, that marginal tax rate goes up the more money we earn. The big misconception that often applies is this idea that if you suddenly go from earning $45,000 to earning $46,000, you're going to be in a situation where at $45,000 you would only lose 15% of that $45,000, and at $46,000 you will lose 20.5% of that whole $46,000. That is not true. In reality, this amount here that we have, if we earn $46,000, well, the first $45,916 will be taxed at 15%, and the next $84 left, essentially to make $46,000, will be taxed at 20.5%. So yes, some of that money will, of that extra $1,000, will be taxed at 20.5%, but it's only one portion of it, and it's not the whole amount that's going to be taxed at that higher rate. This is for the federal rates, and if you scroll down through this page, you'll see different things, and these are tables that you might see in your income tax report as well, that kind of tries to highlight what would your total amount be. And for some reason, some people, when they see this, let's say this amount times 20.5%, they have the misconception that essentially they're getting taxed the whole amount at 20.5% if they earn $46,000, which is in this range. But in reality, here, if you were to punch in the numbers, $46,000 minus $45,916, you would see that you only have $84 left, which is taxed at that rate. And this amount here, the $6,887, is essentially that if you fill this whole bracket completely because you've moved on to the next, well, what's this amount times 15%? It's going to give you this exact amount. And same goes for the other ones. This is the two first brackets fully filled out. That's the amount of taxes you're going to have to pay. For this example here, we're only going to look at federal taxes, but if we look at provincial taxes, we'll see that each province sets their own bracket ranges, and they set their own percentages as well. So essentially, if no matter which province that you're interested in, you could look at how it's set up. Okay. So here in Alberta, they used to have a flat rate tax system, which was 10% throughout. Now they've just changed that. And if we look at British Columbia and other provinces, here we have between 5, 7, 10, 12, 14%, depending on the ranges that we're in. Quebec, which is the province that Bishop's University is in, says to go and click on another link and see what's going on. If you click on the link, you get this page here. I always kid around by saying that you have to click on another link because they're ashamed of their tax rate levels. If you look at here, it goes between 16, 20, and 24, 25.75% for different income ranges. So if you earn over 100,000, you're taxed essentially 25% of that income. And even at low amounts, you're still taxed close to 20%. Where if I compare this to beautiful British Columbia, for that same kind of range here, above 100,000, it's taxed at 14.7%, which is a little bit more than 10% lower than what Quebec would have for the high income earners. But if we look at all of the other ranges here, it's much lower than 20%. Something to keep in mind in Quebec as being a difference. If you're going to earn more elsewhere, you might end up with a lot more after taxes are paid. So let's go through an example here to try to understand this. So I just set up a really simple Excel file going through the different tax rates. What's the lower bound of that tax rate? What's the upper bound? And naturally in this last tax rate, the upper bound, there isn't any. What's the bracket size? And different income levels, total taxes, net income, average taxes. So let's say I go through that example that I had a second ago of 45,000. Well, 45,000, I'll owe 6,750 in taxes. And if I compute the average tax rate, well, it's 15% because all of the income that I earn is at that same marginal tax rate. Okay. And essentially, I end up with paying 6,750 in taxes. Okay. And I end up with this amount here and after taxes. Let's just save this. Okay, so I'm just going to paste this as a special. I'm just interested in the values. Okay, we'll just keep that as is for now. And let's say I bump it up to 46,000. Well, you could see I owe more in taxes. My average tax rate here is still 15. If I were to round this up, but essentially the amount would actually be a little bit higher than 15%. If I take something that's not really rounded, a number here, and I say, well, what is my total income taxes paid over my total income? I could see it's around 15.01%. So my average tax rate has gone up because a very small part of that income is now taxed at 20.5%. I could see that I've filled that first bracket completely, and a small part of it is in the next bracket, and in that bracket I owe roughly 17. All of these are rounded numbers, but essentially I owe about $17 on that extra amount and within that tax bracket. Okay, so you have to make a distinction between the two. You have to make sure that you understand that by going up tax brackets, it's not that big of a deal. So if I go through an example here once again, let's do another one. Here I'm at 91,000. Okay, at 91,000, I have this situation here where let's just paste this here. The values, okay, and I go up to 92,000, which essentially I'm switching tax brackets once again. And if I compare these amounts here, I could see that, yes, I owe, my total taxes are higher than before, but I could also see that my net income is higher than before as well. If I were to take the difference between the two, I'll get $786 more for that extra $1,000. I cannot end up with less money as I earn more income. And you can see that now my average tax rate is actually going up as this happens. And this makes sense. If I think about this, roughly speaking, if I earn $92,000, there's about half of the amount of money that I earn, which is taxed at 15%, about half of the amount of money I earn, which is taxed at 20.5%. The average between 15 and 20.5 is like 17.75%. There's a very small amount that's at 26. So roughly 17.75 rounded up is 18%. So I have this situation where my average tax rates goes up, but essentially what I'm interested in is how much more money I owe to the government from this increase. Okay, so if we think of RRSPs or anything else, let's say now going from this example here of 92,000, okay, and I were to increase that to 97,000, okay. Let's see what happens here, the difference between the two. Okay, so I could see that between these two here, what happens is I will pay an extra amount of taxes of $1,300, and essentially my income will go up by $3,700. Okay, and so essentially if I were to buy an RRSP when I'm earning $97,000 of $5,000, which essentially brings down my taxable income down to $92,000, I would save this $1,300 in income taxes, and that would come back to me. So you could go through any example and you could ask yourself that same kind of question. But essentially, we're interested in knowing how much money we save. It's going to be important when we think of RRSPs. And the whole idea behind RRSPs, which I will cover in another video, is that you want to buy them when you're earning a lot of money and have a very high marginal tax rate on those extra thousands that you're going to buy an RRSP. So if you buy $5,000 worth, you're going to have a really high marginal tax rate on that $5,000 amount. So if you're earning like $100,000, well, you'll be claiming that 26% you've paid on that $5,000 back, and essentially you want to use it in retirement when you're not have that much money, maybe when you only have $40,000, and claiming that extra $5,000 then will lead to a situation that you're within this range here, so you only owe 15% as you take that money out. But we'll go through that in another video. I hope that through this video you've seen that with higher income levels, you cannot earn less money after taxes. It's simply impossible. If I look at my net income for each of these, as my income rose, my net income always has to go up. Even if I switch brackets from here to here, it still has gone up. So let's go through some other videos to look at how to best invest your money now that you've understood the Canadian income tax system. And once again, this is just for federal taxes. If you're in any of the provinces, you have to add on how much you owe in taxes on the provincial side as well.